Hi, today I'm just going to talk about a few mechanisms that are very important to help students to be able to have a concise way of remembering concepts on how to answer macroeconomics. And one of the most important mechanisms that students should really have a big picture of is the things that will affect the level of investors' confidence. So with a little flowchart that I'm going to show today, it will allow students, hopefully, to have a clearer picture and a more concise way of remembering what investors' confidence is all about. Okay, so let me just start with a flowchart. So what affects investors' confidence? There are basically two main branches or two main factors that affect investors' confidence. The first factor is the expected profitability of your investment. So all investors, all firms, their main aim is to profit maximize, and therefore the expected profit levels of the investment will affect their confidence. So from there, you further break it up into the expected returns or the expected revenue and the expected cost of doing business. Okay, now so that's how you do it. Okay, so examples of what affects expected revenue or expected profit, you can think in terms of the corporate tax. Expected cost, you can think in terms of the cost of business, like rent, like wage, like indirect taxes. These are the things that might affect the level of investors' confidence in an economy. Now, the second branch is something that's a bit more qualitative. It is the one that, if you read through all the school notes, you will see a lot of repetition, and it all can be summed up nicely in this part called what I called the conduciveness of business environment in a country or in an economy. The conduciveness of a business environment can be subdivided into two main branches. The first branch is the ease of doing business. And the second branch is the level of stability in a country. Now, so why is this conduciveness of business environment so important? Because, for example, let's say if you go to a country, okay, the country has lots of potential in terms of earning huge profits, but yet there might be some form of stability. Investors' confidence might erode. Now, when we talk about stability, there are two main types of stability that investors look out for when they want to invest in the economy. The first one is called price stability. The second one is called political stability. So price and political. A good way to remember, PAP. The ruling party of Singapore for many years. So, this can be a slogan. If you vote for PAP, you get price and political stability. So, in fact, if you can remember, one of the aims is price stability, one of the macroeconomic aims of the government. Now, how about the ease of doing business? Now, even if there's stability in the country, and stability is very important because stability leads to certainty. But sometimes a country might be very stable, but it might not be very easy to do business in. Why? Because there are two main factors that affect the ease of doing business. So what are the two main factors? The two main factors are, number one, the level of infrastructure. The level of infrastructure. Now, the level of infrastructure can be usually affected in two ways. The first way is the level of transportation. Whether do they have a comprehensive transportation network? The second one is the availability of a very fast and reliable internet connection. So that's one, the level of infrastructure, whether does it help to do business more easily. The second one is the amount of regulation, or sometimes we call it red tape, or sometimes we call it bureaucracy. Okay, so to sum it up nicely, this is the flowchart or the mechanism that JC students can actually remember. And from this, they can actually do a lot of things with it. Okay, so for example, let's take Singapore as a case study. Okay, for Singapore, why is investors' confidence so high? And let me just use a different color to explain it. Now, Singapore's investors' confidence is high because firstly, Singapore has very low inflation rate. That is usually about 2%. So there's price stability. Secondly, Singapore has political stability. The ruling government has been ruling Singapore for many years now, and recently they even have close to 70% of the popular vote. Okay, what else? What makes Singapore such a easy country to do business in, where investors' confidence is so high? We have a pretty comprehensive transportation network in the area of train, in the area of our airport. We're the best airport in the world. And of course, the government has spent huge money to build lots of internet cable to ensure that the internet speed throughout Singapore is fast and reliable. Now, contrary to popular belief, Singapore has actually very, very little regulations in terms of starting business. In fact, to start a business in Singapore is so easy. You just got to log on to the internet. In less than a few hours, you are able to set up a business with minimal fuss. Therefore, the ease of doing business in Singapore is pretty high. Now, furthermore, Singapore has one of the lowest corporate tax rates in the world. Okay, it is only at 18% corporate tax. And this means that the after-tax profits is high. So therefore, the expected profitability is high, and thus investors' confidence is relatively high in Singapore. But is Singapore all good and no bads? Not really. We always remember that in economics, there's always trade-offs and there's always two sides to a story. Now, one of the biggest drawbacks of Singapore that will affect investors' confidence is expected cost of doing business in Singapore. In Singapore, rent and wages are very, very high, and thus the cost of doing business is pretty high. Okay, not just that, another thing is that the level of productivity, okay, contrary to popular belief again, the level of productivity in Singapore is actually pretty low compared to a lot of developed countries. So the main reason is because of high cost of doing business, our profitability might be low. Furthermore, we have a small domestic market. So because we have a small domestic market, companies that are built in Singapore, they cannot just think about serving the local market. They must think about serving the region. If not, it is very hard for them to earn a lot of revenue, and that might affect Singapore's investors' confidence. And of course, because of a small domestic market, it means that most companies in Singapore, whether is it foreign or local, we are very, very prone to external environment. Now, so to sum it up nicely, this and through the context of Singapore, I have hopefully shown you all why investors' confidence can be affected in two areas: expected profits and the conduciveness of business environment. And allow me to just continue to elaborate about the importance of knowing the factors that affect investors' confidence. Why? Because investors' confidence affect the component I. Now, I is a very important component because it is through the I component, the investment component, that a student can link to the various goals and aims of an economy. Why is that so? Now, when I changes, I will affect AD. And AD will in turn affect actual growth and cyclical unemployment. Okay, but I is also a very special component where it is used to accumulate capital. When investment spending is used to accumulate capital goods, this will lead to an increase in productive capacity of an economy. So LRAS will increase, and this will actually affect potential growth. Not just that, when I invest in technology and automation coupled with labor, it will actually increase labor productivity. And this will in turn also affect RAS and will affect your potential growth. So as you can see, through investors' confidence, you are able to link it to I, and I, you can link it to AD, you can link it to RIS, you can also link it to cost of production. When labor productivity increases, cost of production drops as RAS will actually increase. Okay, and investors' confidence, when it affects I, it also affects FDIs. And FDIs for H2 econs, you can link it to your financial account or capital account balance. So now you can see why is this whole flowchart so important, because through the level of investors' confidence, you can link it to I, the FDIs, and then you can link it to the 4 macroeconomic goals. So I hope that through this flowchart, students will be able to have a better idea or a better picture of what affects investors' confidence and in turn, what affects investments.